really when we talk about governance and best practices, and I'm sure all of you in the room, you have a very sophisticated investment committee or investment manager. You're really doing the due diligence before you're entering into any alternative investments. Now, some of you, your portfolio might be at a stage where you're just slowly getting into alternative investments. It's really doing that upfront analysis and having a checklist of making sure that that it's fitting within your mission or your investment policy as a foundation. I have clients that are not part of their policy and part of their practices, they cannot invest in any companies that have any sort of tobacco-related investments. And that could be a whole slew of investments, right? It could be publicly traded, it could be within partnerships. And so doing your due diligence of really what makes up that investment is really crucial in the upfront. You know, on-site visits, is there background checks being done on the investment managers? How often are you checking in with those investment managers? And the telltale signs that you're looking for of whether or not you should be worried about the alt investment. Did the fund manager just all of a sudden up and quit? Did he get fired? Do they receive an audit? I know it seems like in this day and age after Madoff that every fund gets audited now, but that's still not the case. We still run into, you might have a small interest in a limited partnership. It doesn't receive an audit. Maybe you feel, you know, the amount is immaterial to your financial statements, but, you know, we were talking a lot about just risk earlier today. It could be a partnership that puts you in a great deal of risk, depending on what type of investments that they have.
How many of you never worried about UBI until you entered those alternative investments? Exactly. A lot of hands are going up. Because really, when you look at the alternative investments, if it is a limited partnership, if it happens to be an LLC with multiple members, what we really want to be concerned about is what is the structure of that investment. If it is a pass-through entity, like a limited partnership, those entities, you look through the partnership, and you as an organization are taking on the activities of that partnership. So if the partnership is generating income that's not related to your exempt purpose, that's taxable. If you happen to be involved or receive an interest of an S Corp, how many of you might have S Corp interests that you're holding? Okay, a couple hands. That too, all items of income are subject to unrelated business income tax. So even though we normally say within a partnership, interest and dividends, rents, royalties, et cetera, is going to be passive and not taxed, if any of that is sitting on a Schedule K-1 from an S Corp, it's all taxable under the UBI regime. Some other items as it relates to the unrelated business income is, you know, we might be in a partnership or we might not know the underlying activities, but may the fund borrow or leverage its strategies, and if that is the case, that may too give us unrelated business income because of that debt financing that's within the partnership. You know, many governing documents, or as you go into your investments, will contain information as to whether or not the partnership or the investment anticipates unrelated business income being generated. So really looking at that ahead of time, not just from an accounting standpoint, the due diligence of the investment, but as your investment committee, maybe it's falling within your department or on your shoulders that you're reading the prospectus and making the decision as far as what are the tax implications of this investment, but you're really looking for that information within the governing documents or other information